The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
You're nearly there, everybody. It's Friday. We've still got one working day to go before the weekend. It's Squawk Box, and look who we've got. We've got Sylvia Amaro with a brilliant interview out of Athens. We've got Juliana Tattelbaum with a brilliant co-anchor, and we've got me, Steve Sedgwick. These are your headlines. US borrowing costs climb with the yield on the 30-year paper sticking above 5% as concerns linger over the government's mounting debt burden.
The U.S. House passes President Trump's landmark tax and spending bill by a single vote in a move that could add nearly $4 trillion in U.S. debt, with the bill now facing its next hurdle in the Senate.
The Greek Prime Minister Kyriakos Mitsotakis tells CNBC exclusively he's optimistic the U.S. and Europe can agree on a trade deal, potentially even lowering Washington's 10% baseline tariff.
Transatlantic trade is too big and too important to blow it up in a trade war that will have no winners. And I see some signs also from the U.S. administration that they're willing to engage and have a serious discussion.
Very good morning to you all. Well, he's done it. He got it over the line. The holdout Republicans, there was a couple of them who could well face some form of challenge now, couldn't they, in the up-and-coming elections in the midterm. But in the meantime, the president got it through. Juliana, the markets, I would suggest, have taken this absolutely beautifully, given the concerns over the short, medium and long term. But just one more point. Whose great idea was to call it quadruple B? Big, beautiful budget bill. Because as far as I'm concerned, and you know this better than I do, what's worse than triple B? I thought worse than triple B was junk, and now we've got quadruple B.
Well, Steve, you've outdone yourself there. I think there is absolutely ample concern around the quality of the U.S. fiscal proposition now, and we're seeing that reflected in Treasury markets. Here you have U.S. equities, which ended the session fairly muted. It was a fairly muted session overall. The Dow ending flat, the S&P 500 ending essentially flat, and the tech-heavy NASDAQ inching higher by about 0.3%. But Treasuries is where all the action has really taken place over the last few days, and the real focus for investors across asset classes. So let's take a look at the Treasury curve stateside and where things stand right now. You got the 2-year trading back below 4%. We're about 3.99%. The 5-year around 4.1%. The 30-year Treasury note still above the 5% level, but we have come off of the highs that we have seen recently. So currently we're trading around 5.054%. In terms of dollar crosses, yesterday the dollar index rose about 0.4%, breaking a 3-day losing streak, still down more than 1% on the week coming into today's session. You have the euro trading on the front foot versus the dollar this morning, up 0.4%. Sterling also trading firmer versus the greenback. We're around 134.55. Dollar yen a little bit weaker, and dollar Swiss franc also weaker this morning. So today seems to be a story of dollar weakness.
Ladies and gentlemen, we have a market now because someone is going to be badly wrong on this US debt story. And I hope I'm around to see it because it could take a couple of years to transpire. I mean, around as an anchor rather than on this mortal coil. Because the fact of the matter is, Kevin Hassett of the NEC, director there, i.e. part of the administration, says we will outgrow your debt concerns. But the guys who've got the debt concerns are saying, whoa, this is going to enshrine a larger government deficit of 6.9%. It's going to enshrine larger debt bills. It's going to mean that the Treasury market remains wobbly, certainly that long end that people are concerned about as well. So we have a standoff in views here as well. And I promise you, Juliana and I will do our best over the coming hours and weeks and months to try and discern who is right, because someone will be. This will be binary. So the US House of Representatives has narrowly passed a bill which would enact much of President Trump's domestic policy agenda, including extending tax cuts and increasing spending on the military. The legislation, I might have mentioned this, dubbed one big, beautiful bill, passed by a single vote. 2 Republicans joining all Democrats present in opposition. Another GOP member voted present, neither for or against, whilst two others, you'll love this, two others accidentally missed the vote. How do you accidentally miss the most important vote of the administration yet? Anyway, they accidentally missed it. Yeah, shame. The bill now heads to the Senate, where several Republicans have already voiced concerns, but so did the representatives, didn't they? And still went through. Anyway, NBC's Ryan Nobles filed this report.
A major victory for President Trump after his signature legislative package cleared a big hurdle, narrowly passing the House early this morning. Speaker Mike Johnson making good on a promise to pass the bill before the holiday weekend.
The House has passed generational, truly nation-shaping legislation to reduce spending and permanently lower taxes for families and job creators.
The massive 1,000-page bill delivers a slew of President Trump's campaign promises, including extending $4.5 trillion in tax cuts passed in the first Trump administration, eliminating income taxes on tips and overtime, and provides billions of dollars in funding for the border wall and mass deportations. It also makes changes to Medicaid, imposing work requirements for the able-bodied adults without dependents in order to stay on the program. Democrats oppose it, saying it will lead to millions losing health coverage.
This day may very well turn out to be the day that House Republicans lost control of the United States House of Representatives.
But the bill now faces a rocky path in the Republican-held Senate.
The Senate's going to want to put its own stamp on this. We'll write our own version of the bill.
Senate Republicans can only lose 2 votes, and GOP senators are already saying the bill does not cut spending enough.
We are stealing from our children and grandchildren, and that's why there's no way I'm going to vote for this bill in its current form.
So contentious. Right, the yield on the 30-year US paper is sticking above 5%. Investors digesting Moody's credit downgrade of the world's largest economy. I'm sorry, I don't think that was relevant at all. I think it was the 20-year auction and the big, beautiful bill that was the key. I'm sorry, Moody's just so far behind the curve. Everything you said is correct, but we all knew it for months and years. Sorry, just saying. That's the highest in around 2 decades, anyway, that yield, bucking the long-term downward trend. Foreign ownership. This is interesting. This is deficit concerns make US debt less attractive to investors. Does it? Does it? High yield offsetting that? I'm going to disagree with everything I read today because I'm fascinated by this. It's all going on in my own head. January projections for the Congressional Debt Office forecast US debt would hit 118% of GDP by 2035. That was before the president launched a trade war and launched his big, beautiful bill. Try not to say in that voice every time. In Moody's credit downgrade last Friday, it said it sees the figure hitting 134% in 10 years' time. Both figures would be the highest on record. Now, foreign investors, are they shying away from treasuries? I don't know. 2023 data from Apollo shows the proportion of foreign holdings of US treasuries at their lowest in nearly 2 decades. And yet last week, the UK overtook China as the second largest holder of US paper for the first time in a quarter of a century. Well, yeah, but I mean, some of the TICS data is showing actually still robust demand, but we need to wait. I think June 18th, something like that, we get the latest TICS data. That'll be the fascinating one. Anyway, our next guest says question marks around the long-term fiscal consolidation are only adding to pressure on the long end of the yield curve. Guillermo Felice is the global investment strategist at PGIM Fixed Income. Guillermo, I will bow to your knowledge on this one, but I want to ask you one question. Am I right in assuming someone's going to be very badly wrong on this? The administration says we're going to outgrow this, and later in the year we're going to grow north of 3%, which is extraordinary. There are a lot of doomsters out there who say actually the trajectory of US debt could eventually be ruinous.
Yes, look, I think 3% growth is pretty optimistic. We're certainly not expecting that. We're expecting a slowdown to something like 1%, 1.5%. And we have to admit that, the debt dynamics is not great, and it hasn't been great for some time. What we're seeing now is the market waking up to that reality and testing, some key levels.
When you talk about key levels, what is the level at which we could start to see the possibility of something breaking? We've already crossed 5% for the 30-year. The 10-year crossed above 4.5%. We've now come back down. But what are the key levels that we should be wary of?
It's really difficult to, draw the line in the sand. So a number that I'm keeping in mind is 5.15 for the 30-year. That's roughly around where we were in 2023, when we had, if you remember, auctions that didn't go well. So it was clear strain in the fiscal situation. What I keep more in mind is the speed of moves and potential dislocations that really could scare the market. It's really, really hard to know, what exact levels are the ones that will trigger something bigger happening in the market.
What about spreads? How have spreads been holding up amidst the rise we've seen in bond yields?
Yeah, credit spreads have been, fairly well behaved. It's been remarkable that risky assets have actually been holding up, very well, despite all these tensions in the bond market. And again, it's this tension, right, between, when do these yields and the steepness of the curve become actually a trigger for risky assets to sell off more aggressively, and we're in that kind of tug of war at the moment.
I think we're in a time where every auction now, and the great Mr. Santelli always updates us on every auction. He's quite brilliant at it as well for CNBC. But every auction now is pivotal, isn't it? And the 20-year, the primary dealers were left with a little bit more than they have done historically. But it was moderately tame, but it was still another warning shot. Every auction is pivotal now, given the fact that the US has got to raise billions and billions and billions over the next couple of years.
I completely agree. If you look at the schedule for debt issuance, it's not just the next few auctions that matter. The ones that will come in the next few years will also be super important. And I would argue, Steve, it's not just about the auctions. It's also about what is decided on the fiscal front. I mean, ultimately, that's what really will decide whether these debt dynamics are going to be sustainable or not over the long term.
One thing should be said, this isn't just a Trump administration phenomenon. I can go back and pretty much every administration this century has increased the debt load. And I mean, the Biden administration, they were running a 6.4% deficit. So I want to ask this question in defense of the Trump administration as well. Why is potentially 6.9% deficit so much worse and so much more dangerous than 6.4% for the Biden administration? They are both staggeringly high.
100%. I mean, this debt problem is not new. I mean, it has been building up for the last few decades.
Which is why I have my problem with Moody's, for instance, as well.
And it's not just in the US. I mean, you have it already in Japan. We've had it for decades there. You have it, to some extent in Europe, in the UK, of course. So this is not a new issue. What is new is that the market is suddenly paying attention. And the reason, of course, is that over the last 10 years or so or more, we've seen interest rates that have been really, really low. And now we're seeing much higher interest rates. The cost of debt is a lot higher. And of course, now there are question marks about, the growth outlook and the fiscal outlook more broadly. So,
what about the role, though, of the perception around the U.S. government and its commitment to economic stability? Because I think, to Steve's point, the last few months have really called into question whether the administration in Washington does have a plan, does have a grasp on things. And we've just heard Scott Bessent over the last few weeks just doing what seems like damage control, telling the market we do have a plan, we do have a process, we do have a mechanism for trade talks, because there's been doubt around the administration's commitment to stability.
So policy uncertainty, and in particular fiscal policy uncertainty, is adding to these fiscal concerns, and that's crucial, right? Because, as you said, now the question is how is the government going to deal with this, and of course, how is Congress going to deal with this, right? So we saw yesterday, now that the bill has passed through the House, now we need to face the Senate. Is that going to be enough to calm markets and to take the debt to the right trajectory? We still need to see.
When it comes to global appetite for U.S. debt, one of the things that I've seen many analysts point to is the dollar weakness, and the fact that the dollar has been weak at the same time we've seen the pace of selling of duration accelerate. What is your sense around the global appetite for treasuries here, and are we seeing it wane? Seems to be a lot of debate.
Well, can I just add to that before you answer that? Gillian Tett, terrific piece as ever. Brilliant journalist. I say I'm just bigging up everyone today. Non-American holdings, brand new piece from her. Data last week said non-American holdings of treasuries hit a record high in March. Now, that's before the tariff war, of $9 trillion. So again, Juliana's point is absolutely pivotal.
So look, I mean, for now there's no buyer strike of U.S. assets, for sure. But what we're seeing is, gradually concerns about whether we should be owning significant shares of U.S. assets in portfolios, right? And you need to be compensated for the risk in order to do that. And when the risks are elevated, you start questioning, is that 30-year safe? Are dollar assets more broadly safe? And that's why when you see, the curve, backing up and steepening, the dollar is weakening. So it's basically starting to send you signals that markets and investors are not comfortable with the idea of holding so much dollars in portfolios.
We want to know what we've got to own. This is your domain, despite everything we've talked about, and it's the hottest story in town, certainly in our little world anyway. What do we own? What do our viewers go out and buy?
Look, long ends are risky assets, and I think we're learning that, day by day. So you want to be, closer to a front end. Certainly in the US, in developed markets, and even in emerging markets, front ends have worked really well. You want regional diversification. So when you talk about fixed income, which is what we do, you want to diversify portfolios regionally. And you want to be cautious in terms of spreads. Spreads are very tight historically, and uncertainty is more than an average. And spreads are clearly below historical averages. So you want to be playing it in a cautious way, up in quality, avoiding the sort of lever structures that are sensitive to interest rates, and even cyclical. Some cyclicals, in an environment where you're seeing pressures on growth potentially panning out, you want to be a little bit cautious also with cyclical exposure.
Great start to the show. Thanks, Guillermo. Lovely to see you, sir. Always a pleasure speaking. Guillermo Felice, actually, is the global investment strategist at PGIM Fixed Income. But what's coming up on the show?
Plenty, Steve. The Trump administration blocking Harvard from enrolling international students. This is quite a story. It's the latest escalation in a standoff between the two sides. We'll break it down after this break. Plus, Greek Prime Minister Kyriakos Mitsotakis tells CNBC he's optimistic that the U.S. and Europe could reach a trade deal. We'll bring you more from that exclusive interview later this hour. And also on the show today, we'll discuss the mining of rare earth metals as countries look to diversify their supply chains away from China. We'll be joined by the CEO of Aclara Resources at 8:30 BST. Welcome back to the program. The Trump administration has blocked Harvard's ability to enroll international students amid a continuing standoff with the university, which has refused to adhere to White House demands on who it can hire and admit. Homeland Security Secretary Kristi Noem calling it a warning to other academic institutions. The move, which Harvard has called unlawful, means that around 6,800 international students currently attending the university would need to transfer or lose their legal status. NBC's Garrett Hake filed this report.
Tonight, the Trump administration escalating its battle with Harvard University, barring the school from enrolling foreign students and ordering the more than 6,700 currently enrolled to transfer or lose their legal status.
27% of their students are foreign students, and they will have to find some other university to go to, and hopefully they find one that cares about them and provides a safe environment.
The White House saying Harvard has become a, quote, hotbed of anti-American, anti-Semitic, pro-terrorist agitators, adding the university now must face the consequences of their actions.
This should be a warning to every other university to get your act together.
Harvard calling the government's action unlawful, adding, we are fully committed to maintaining Harvard's ability to host our international students and scholars.
It's saddening and it's stressful.
Carl Molden is a Harvard student from Austria studying government.
Do you think you'll be back at Harvard in the fall?
It's hard to make a call, I hope. I'm uncertain. I think with this administration, anything can happen.
In April, the administration froze more than $2 billion in federal grants to Harvard over what the White House said were concerns about unchecked anti-Semitism on campus and demands to change hiring and admissions processes. The university's president pressed by Lester last month.
Is this really about anti-Semitism?
I would say that at Harvard, we have a real problem with anti-Semitism. We take it very seriously, and we're trying to address it. we don't really see the relationship to research funding at Harvard and other universities. They are two different issues.
You got a bit of value on this one.
Well, I mean, I think this is an extraordinary story, and I think anybody in the U.S. has really taken an interest in this story. You heard Larry Summers yesterday coming out. He is a Harvard alum, calling it vicious, illegal, unwise, very damaging, what the Trump administration is doing here. The angle I was going to take, and perhaps linking this to what's, our world, the business world, U.S. college endowments are coming under a lot of pressure. This is just the latest move from the Trump administration to come down on universities in the states. We've already seen the Trump administration freeze funding to Harvard. I believe that they've frozen more than $2.6 billion of Harvard's funding. They've cut future grants. And why is this relevant? Endowments are big holders of private equity. From an endowment perspective, 30 to 45% of investment in endowments in a number of top universities in the U.S. goes to private equity. So if we're now looking at endowments under pressure to raise funds to make up the deficit left by the funds that have been pulled, we are looking at a potential rush to exit some of these PE stakes. And we've already heard murmurs of this happening. When you look at the PE side of it, endowments make up a relatively small portion of LPs in PE funds. So it's not huge in terms of the magnitude from a PE perspective, but it constitutes a major portion of endowment investing. And if we see them all rush for the exit at the same time, that could certainly put some pressure on secondary markets.
What is the problem that's an amazing perspective, and I didn't know any of that, so thank you very much indeed. What is the problem that the administration has with Harvard and the rest of the Ivy League? One, and I think this is very justified, you have to ensure the safety of all students on campus, all students, and there is an accusation that Jewish students feel unsafe and have been put in unsafe positions on campus. Now, given the appalling, devastated, outrageous events we saw in DC this week as well, where 2 Jewish staffers at the Israeli embassy were shot dead in cold blood leaving the Jewish Museum event, and that's appalling. This is an incredibly important and hot topic, so all of those Jewish students should be made to feel safe. But equally so, no, not equally so, safety is far more important. But students need the right to expression. That's when you have the right to expression. It's the right to free speech, which is enshrined in the United States as well. And there are concerns that some of the moves from the United States government as well, basically seeking the records of all foreign students' illegal, dangerous or violent activity. Now, of course, illegal activity, that should be complied with, but all activity which is deemed dangerous, in inverted commas, including instances of students making threats or disciplinary action against them as well. If you can't protest and get on a protest march when you're a student, then when can you in life as well? And it's such an important part in the resistance that many students mounted against the Vietnam War and the civil rights movement as well, and a whole host of key events in US post-war history. The role of the student has been absolutely enshrined in US history as well. So first and foremost, absolutely the safety of all students, and especially at these terrible times, how the Jewish students feel. After that, this is a dangerous overreach, according to many, including Larry Summers and that as well. I would imagine it will be embroiled in the courts immediately.
Well, when it comes to Harvard specifically, just adding to everything that you just said, President Trump has also taken issue with what he says are students who have alleged ties to the Chinese Communist Party. This is part of the reason he has cracked down on Harvard specifically. I think this whole episode, whether we see the move from the Trump administration yesterday revoked or not, it certainly will raise questions from international students, prospective students, whether they want to even take the risk of going to U.S. universities if the possibility continues to be there for them. So is this a boon to universities outside of the U.S., British universities, for example? Are we going to see a major shift in appetite from foreign students in terms of where they want to go?
It's very interesting you should say that, and I've just checked, but I'm pretty sure that one of the top stories on the FT today is, here we go, US applications for British citizenship. So this isn't so much the non-American students in America. This is about Americans. US applications for British citizens hit record high after Trump win. Now, this is according to the Financial Times. Immigration lawyers report surge in Americans looking to move to the UK as well. And I think that just adds another element to the point you were making.
Yeah, absolutely, it does.
Let us move on. Another key story, so much news out of the US, and that's why we're focusing on it. The US Senate has voted to block a California plan to end the sale of gasoline-only vehicles by 2035. The plan has also been adopted by 11 other states, around a third of the US auto market, with the repeal of a Biden-era EPA waiver now heading to the president's desk.